Today, we are learning from Bill Ackman, who is the CEO and founder of Pershing Square. Bill Ackman caused a stir with his large short position in the corporate debt market last year when he was able to turn 20 million into 2.5 billion in only a few short weeks. Ackman has been investing for nearly 20 years and has experienced many ups and downs throughout his career, something novice investors may not be aware of. He has taught us from his experience. I hope you guys enjoy it. Bill Ackman, 7 mistakes every investor makes. Overcoming adversity. If you look at the most successful people in the world, there are probably very few of them. I know very few of them who haven't suffered a significant setback. If you browse through the Forbes billionaire list and read their biographies, you'll discover that they aren't the richest people in the world. They've lost everything due to failed businesses, and they've clung to the brink so tightly that they almost perished. You're aware of his name, the K, the Redstone-related character on CBS's Summer Fire. There are many instances of people who faced extreme hardship. I believe that your ultimate success is more likely to be determined by how you handle hardship than by how you handle victory. Learning from mistakes. You can learn about the investing industry by reading, for example, all of Warren Buffett's published works or watching each and every one of his YouTube appearances. However, investment is more than just a means of understanding. To understand an enterprise is to invest. Just simply knowing the difference between a great business, a good business, a fair business, and a bad business is one of the most crucial abilities you need as an investor. This is the best time in history to work for a startup because so many entirely interesting firms are being founded, and the only way to understand the quality of a business is to work for one. As a result, the advice I give to those graduating from business schools today is to do just that. You'll learn a lot about how the business operates, how to make payroll, how to sell your product, and how to develop something if you can be one of the first employees. And I believe those abilities are priceless. First of all, even if the business fails, you learn a ton from it since you might have joined the next Facebook, which is incredibly exciting. I believe that is the most practical experience you can have to become a solid fundamental investor. Learn to invest right. How can an investor be successful? I'm presuming right now that you won't pursue a career in investment. Instead, I'm thinking that you'll become a doctor or a lawyer and follow your passion. However, you will eventually have some money that they will save. I'm going to offer you some advice on the subject. I won't necessarily be conclusive, but it's one of the pieces of advice my sister's grandma would receive from me if she were in your shoes. I would stay away from making investments in new companies whose prospects are unclear. Again, you don't need to earn 100% of your income each year to be wealthy. All you need to do is to invest at an appealing return of 10% to 15% over an extended period of time, and your money will increase dramatically. How can you steer clear of the riskiest investments then? My recommendation is to invest in listed firms and public securities, organizations that have stock market trading. Why? Because those companies are more frequently found. Because going public, they must clear a number of obstacles. The stocks are liquid, so you can sell them if you change your mind. Be confident. The best investments are those where we are convinced that we are correct and that everyone else is mistaken. You've recently, among other things, been accused of being arrogant. So you have to, pompous. I don't think I'm pompous, but I've certainly been accused of being arrogant, and there's a difference between arrogance and confidence. I'm going to genuinely ask you that it was pompous, but that's okay. Yes, you will perish if you conceited an investor. Okay, if you're not sure you'll ever invest, that's fine. Therefore, you must put in enough effort to gain the self-assurance necessary to act with conviction in an contrarian manner. We acquired the equity of a retailer that would soon file for bankruptcy, a shopping center company during the financial crisis. I'm sorry, you have to be willing to look foolish when you do something like that, when shares are only cents. Generally, rising stocks have returned 90 times our initial investment. You know, back when we were confident in our ability to turn things around, perhaps some people thought it was conceited of us to think so. Contribute more. If you invested, how would you act? That is a good question. I mean, even if I weren't paid for what I do, I would continue to do it because I believe it will allow me to contribute the most that I possibly can. I imagine myself influencing government in the same manner that I impact the private sector. But I believe that I have more power as a private participant than a public participant. Deal with criticism. 7 years ago, I met Bob Chapman, a money manager, at a panel discussion. We shared a panel at an event, but I haven't spoken to him or exchanged emails with him since, and I've never seen him. However, he has been making the rounds on talk shows for the past 90 days, claiming that I am either incorrect, foolish, or arrogant, giving quotations to Vanity Fair. You know, it's regrettable. I don't mind criticism, but I don't appreciate reading things that are challenging for someone who is unfamiliar with me to understand, especially when they are making personal observations about me. But as you well know, in order to work in this industry, you must have a thick skin. Additionally, you should anticipate having both supporters and detractors if you find yourself in a very public circumstance. I just try to concentrate on doing my work, and our goal is to make money for our investors. I live my life too. Always do your due diligence. I attended business school to develop my skills as an investor. I also discovered the first investment rule, which is to conduct your research before writing any money. And when I initially opened the course catalog at HBS, I discovered that there wasn't a class on investment. Now that there were accounting and finance programs, I made a decision that I would have to create my own small self-study course, and I wanted to open a brokerage account with Fidelity. I stated that this was my tuition for the investing business, and that I had some money for my real estate brokerage business, and the cost of tuition was approximately a year. I reasoned that it wasn't the opposite of the Oxford 1+ program, because if I lost, it was the same as paying for 3 years of business school, but only attending for 2. However, my initial stock purchase instead, so I approved. I've discovered what I want to do. However, inquire after my father, who came with us as is standing there in the corner. Any questions you have after that are yours to ask. He advised me that starting an investment fund right out of business school is a particularly bad idea, and he advised me to go to work for Michael Steinhardt, George Soros, and another well-known investor at that time, but I believed I already knew enough. The answer is that I was an entrepreneur and believed that I wanted to tackle investment my own way rather than learn from someone else. This is a hazard to youth. Additionally, it's one of the rare things you can truly learn on your own. In contrast to many other businesses that require much more, learning how to invest may be done by reading books, yearly reports, building a portfolio, and investing $100. From our discussion, what have you learned? Please let me know by leaving a comment below. And if you enjoyed this video, please press the like button, turn on the notification bell, and subscribe to Wealth-ology for more videos like this. Thank you for stopping by to watch. See you in our next video.